listening to the Agent Survival Guide podcast, a podcast for today's insurance agents. Informing, educating, empowering, improving the way you do business in an industry that's anything but static. In today's episode, finances are a pain point for many Americans right now. What happens when your clients need to start cutting costs, and that cost is their permanent life insurance premium? We've got 5 solutions that can help your clients when money is tight. What to do if your clients can no longer afford their permanent life insurance premiums. Written by Brenda Salyer and Roxanne Anderson. Are your clients struggling to pay their permanent life insurance premiums? They have options other than letting their policies lapse. Here's how you can help them salvage their benefits. While inflation significantly decreased from the beginning of 2023, cost of living, car prices, and housing rates are still providing stress for a lot of Americans. Many are still worried about paying bills and putting food on the table. In a 2023 survey conducted by CNBC, more than half of Americans reported living paycheck to paycheck. 74% of Americans stated they are stressed about finances. With many Americans struggling financially, living paycheck to paycheck with little in savings, many tried to find ways to cut costs. In an effort to save the money they'd spend in premium, you may find that your clients think they have to let their permanent life policies lapse. However, this could negate all of the premiums they've already paid and take away the valuable financial security they've invested in. There are several ways you can help them to keep at least some life insurance in place. We'll cover the most effective ones in this episode. Starting with solution number 1. Use the cash value in the policy to cover payments. If your client feels that they will be able to continue paying their permanent life policy's premiums in the future, but just need a temporary break, they could use the cash value in the policy to cover the payments for a short period of time. You can ask the carrier for an in-force illustration to see how the break will affect the value of the policy for your client. If the client needs a longer break from paying their premium than what the cash value can cover, it may be better to go with solution 2 or 3. Jumping right into solution number 2, activate the waiver of premium rider. If your client has lost their job but purchased a waiver of premium rider when they purchased the policy, the rider may allow them to waive their premiums in the case of unemployment. Many waiver of premium riders can only be used in the case of a disability, but it is a good idea to check to be sure. Solution number 3. Take advantage of the policy's non-forfeiture option. Many policies have a reduced paid-up option, allowing the owner to stop paying the premiums and convert the policy to a permanent policy at a reduced face amount. If your client has this option, they can keep some of the face value without having to worry about paying future premiums. You or your client would need to reach out to the carrier to discuss a reduced paid-up option. The carrier should then provide you or the client with an illustration of what the current cash value would provide in reduced face amount, and then the client would have to agree to convert their policy. Moving on to solution number 4. Use the cash value to buy a single premium whole life policy. Does your client have enough cash value in their current permanent policy to purchase a single premium whole life, or SPWL, policy? SPWL is a permanent, paid-up life insurance policy, meaning no additional premiums will be due at any point in the future. Like multi-pay permanent life insurance, single premium whole life insurance guarantees a benefit will be paid to the policyholder's designated beneficiaries upon the death of the insured. The carrier determines the face amount of an SPWL policy based on the amount of the initial single premium payment and the applicant's health at the time of the purchase. Initial face amounts often begin at $5,000 and go up to $10,000, but some carriers will issue lower amounts. Here at Ritter Insurance Marketing, we're always here to help. So if you have questions or need assistance contacting carriers, you can send us an email at asgpodcast@ritterim.com, and we will get you the answers you need. Getting back to it, here are some additional reasons to consider a single premium whole life policy. Because the policy is paid up, there is no monthly or annual bill. It will never lapse. SPWL offers continued cash growth through interest earned on the policy. Carriers may have a declared minimum interest rate of return for the policy. Some carriers offer participating policies, which can earn dividends, also increasing the cash value over the life of these policies. SPWL's tax advantages allow the cash value to grow tax-free and the death benefit to pass to beneficiaries tax-free. The policyholder can borrow against the cash value of the policy tax-free. Something to remember: if the policyholder withdraws funds from their SPWL policy, they will have to pay tax on the interest built up inside the policy. And last but not least, solution number 5. Have their life insurance fund a funeral trust. Clients who can't afford to keep their permanent life insurance can also convert the cash value in it into a funeral trust, which would earn interest with no further payments needed. Funeral trusts, also known as funeral expense trusts or burial trusts, are made up of money that's set aside to fund anticipated funeral and burial costs. You can help a client arrange a funeral trust with a specific funeral home or cemetery, or with an insurance company, if they'd like the flexibility to use the trust at any funeral home. Most states have a limit as to how much someone can place in a funeral trust, typically around $15,000. Any funds that remain after funeral and burial costs are met will go to named beneficiaries. Here are some additional reasons to consider a funeral trust. Creating a funeral trust with the carriers Ritter offers does not involve legal fees. Funeral trusts can be revocable or irrevocable. A funeral trust may be considered exempt under Medicaid spend-down requirements, which typically involve a 5-year look-back. Since your client would be using life insurance to fund the trust, interest earned within the trust and trust proceeds are income tax-free and exempt from probate. This enables a client to pre-plan their funeral, sparing their loved ones a lot of difficult decisions during an already difficult time. If you're looking for more information about funeral trusts, head over to the episode notes to download our free ebook, The Complete Guide on How to Sell Final Expense Insurance. Paying life insurance premiums often falls to the bottom of Americans' list of priorities, and we'd say this is likely even more true during times of financial hardship. If you have clients whose financial situations have changed, reassess their life insurance needs for the different stages of life they're in. They may need some extra wiggle room in their budget now, but it doesn't have to cost them the life insurance they've been paying for all these months and years. With your help, they can salvage their peace of mind investment and hold on to some future financial security. Again, if you have any questions, don't hesitate to contact us by emailing asgpodcast@ritterim.com or by leaving a voicemail at 1-717-562-7211. Thank you so much for listening. We will see you next episode. The Agent Survival Guide podcast is a production of Ritter Insurance Marketing, an Integrity company. This episode was written by Brenda Salyer and Roxanne Anderson. Script adaptation by Tina Lamoureux. Recording and production by me, Sarah Ruppel. Podcast design by Urban Rivera. Artwork by Vivian Zhao. Follow along with our show wherever you like to listen.